And now for a deeper analysis of the Bank of Korea's decision, we're joined today by Professor Kim Jin-ill, Professor of Economics at Korea University. Professor Kim, thanks for joining us this morning.
Thank you for having me.
So the Bank of Korea has decided to keep its key interest rate unchanged, and this is something that was widely expected, right? What's behind the central bank's decision?
So basically, the Bank of Korea is considering that the current rate, which is at 2.5%, is basically at a comfortable level as far as the whole Korean economy is concerned. As you mentioned, there are many features that the Bank of Korea is considering about Korean economy. Exchange rate is one thing, stock market is another, but most importantly, it's inflation rate and how the economy is evolving in terms of the employment and other parts of the real economy. So some are really good, like the stock markets, and also exchange rate is pretty in the low range relative to where it has been the last several months. But other parts is not doing as well. Inflation is low, but still above the 2% target. And most importantly, economic activities are pretty low. If you go around the restaurants during the lunchtime, you can easily see so many of the restaurants have been closed down, and that's a problem. So overall, Korea is thinking of keeping the rate at 2.5%. And you mentioned that Bank of Korea has been on hold for 6 times. And since they have meetings 8 times a year, it's almost a year. So for almost a year, they think the current rate is at their best or comfortable range.
Right, and how long will the central bank maintain the current interest rate? What can we expect for the rest of the year?
So since they didn't expect any immediate action like going up or down in the near future, that's what they have been thinking. And since they raised the forecast for the Korean growth of 2026 from 1.8%, which was announced 3 months ago, and now it's 2.0%. So given this increase of their projection, I think the Bank of Korea will maintain, unless other events happen on either side. So they will hold it pretty constant. And furthermore, I think actually they announced the rate like 15 minutes ago, and in about 15 minutes, they will issue the statement, which is like 1 page or 2 page, the statement about their short explanation. And with it, first time in their history, in its history, in the history of Bank of Korea, they'll start announce their own dot chart. Like the dot chart in the US Central Bank, it may be called K dot chart by the media, and they will announce what the MPC members, policy members are thinking about what the rate would be 6 months from now. So in 6 months, they will issue the economic projection and when the rate would be, in 6 months, what the rate would be at that time. And 7 members are putting, I believe, 3 dots, and then sort of 21 dots. They'll be announced in about 15 minutes from now. And I'm sure that it will be a hot item for analysts in Yeouido to discuss for a day or at least a few days.
Right, and you talked about inflation. The Bank of Korea also released its updated forecast for the country's economic growth this morning. What's your take on the central bank's inflation outlook?
Inflation outlook is still above 2% target, but it's converging, and next year's expectation is basically 2%, which means that even though it's a little bit low, it's higher than the target, which has been like that since COVID, right? And then other countries were even worse. Like in the US, inflation was around 9% for a few months as for CPI. And Korea inflation was not as high as that, but it was still much higher than 2% target. Now it's moving down to 2%. And terms of their projection, this year is a little bit above 2%, I think 2.2. But next year, if it moves back to 2%, which is exactly their target, they don't have to match the target every year. They are matching the target in the medium run. So if it is forecasting, it's following the path of the projection in its release this afternoon, I think they will explain why they feel comfortable about this forecast. And if economy stays above 2% in terms of growth and going towards 2% in terms of inflation, I think that's what they call the Korean's potential.
I see. And you also mentioned that the stock market's doing really well. The benchmark KOSPI actually topped the 6,000 mark yesterday, just about a month after that surpassed 5,000 points on, largely driven by a chipmaker rally, including Samsung Electronics and SK Hynix. How long will this momentum last?
Yeah, that's $1 million question, and nobody knows. What I do know for sure is nobody knows. Yeah, that I can tell for sure. And from 5,000 to 6,000 in a month, it's like 20% in a month. I don't know too much about the history of the Korean stock market. So 20% in a month, that's pretty rare, I believe. I don't know when the last the big bubble of Korean economy was. And in the US, there are a few episodes in the recent history. Of course, if you go far, there are more. And I believe that it could be both components. Some of them are like this fast. How long? They cannot increase by 20% many years, right? It's not easy. It's almost impossible. And Korean economy, of course, is undervalued, that's for sure. But how much? That's a question. So in terms of that, the stock market rally would converge to a similar growth with other countries, the stock market growth, which is still high. That's because of AA, for sure. Yeah. But this fast growth of 20% a month, I think that cannot be sustainable forever. Of course, it could go for a while for sure. I'm not saying it's today or tomorrow, right? But nobody knows when. But some market adjustment, not the huge drop, but like going down to the international average level of stock market growth, that is, I think I can say it's inevitable, but when, that nobody knows.
I see. All right, Professor Kim, thank you so much for your time and insight this morning. We appreciate it.
Thank you.